pleasant day. To ultimately provide strategic recommendations to Intel, the Fairies Consulting Group continue our comprehensive assessment by now providing the rival and industry analysis which we promised. Recapitulating the Fairies' internal report of Intel, analysis revealed Intel's deteriorating financial performance, declining market value, struggle to gain market share in the GPU segment, and leadership instability pose uncertain business direction for Intel. Despite this external assessment potentially unveils opportunities and threats for Intel. Let us begin with this brief profile of Intel's major rivals in the GPU industry. GPU market leader Nvidia is well known in the industry for its GPU's high performance with complex tasks. Currently, Nvidia is paving the way for artificial intelligence. Meanwhile, GPU market follower AMD strives to have leadership products striving to meet client needs. AMD has been consistently improving and gaining market share over the years. Now, how does the financial performance of major rivals compare? Nvidia's revenue growth through CAGR reveals an increasing trend. Meanwhile, AMD's revenue growth has been declining as shown in their revenue's declining CAGR. These figures alone from rivals show that Intel's revenue is truly deteriorating. The following comparative graph and table of profitability ratios show Nvidia being a step ahead with its high gross, operating, and net income margins. Notably, fabless Nvidia and AMD reveals lower COGS and OPEX percentage to revenue compared to Intel's. With the company's profitability, cash flow to revenue show that Nvidia generates sales to operating cash very well. However, cash to income reveals that AMD generates cash much better from its operations. Additionally, cash return on assets signal Intel and AMD's inefficiencies in generating cash from assets. Inventory and asset turnover thus reveal AMD and Intel's operating efficiency being behind Nvidia's. In addition, days inventory on hand presents AMD and Intel holding their inventories longer compared to Nvidia's. As for investment valuation, market price values show Nvidia and AMD having closer market values with Intel lagging behind. Additionally, price to earnings also show high expectations of Nvidia's growth. Additionally, per share valuation reveals Nvidia and AMD having better financial performance compared to Intel. Continuing, current ratios and quick ratio and z-scores show Nvidia and AMD having no problems in meeting short-term obligations compared to Intel already in the distress zone. Notably, the cash ratio of AMD similar to Intel's is declining, while working capital of the rivals is still on the positive growth. Nvidia also has the highest defensive interval among the three GPU players. As for long-term obligations, Nvidia and AMD has no problems in covering interest expense. Net gearing leverage ratios show Nvidia and AMD's relying less on debt financing, which is also evident in their liabilities ratio, leading in a slightly lower financial leverage as compared to Intel. This indicates that Nvidia and AMD is in a much better financial position. Overall, DuPont reveals that AMD and Intel has to improve their profitability and operating efficiency to be ahead of the competition, as Nvidia displays excellent profitability and operating performance margins evident in their return on equity figures. Following the financial analysis of Nvidia and AMD, we now examine their value chains to understand the strategic drivers behind their performance. For their inbound logistics, while Intel has high automation in warehousing, Nvidia has AI-powered logistics, while AMD has centralized inventory management. The key difference between the operations of Intel and its rivals is that Intel manufactures its own chips, while companies like Nvidia and AMD focus on chip design and follow a fabless manufacturing model, outsourcing the actual manufacturing to external foundries. For outbound logistics, Intel has a vast network of distributors. Nvidia uses AI-powered multi-model distributions through its partners, whereas AMD leverages an even broader base of distributors with the guidance of their two-tier distribution model. For their marketing, Intel has relied on their heavy branding as former market leader, while Nvidia relied on robust digital marketing and AMD has unified branding and tools. In their after-sales service, Intel offers basic warranty and distributor-based support, while Nvidia provides comprehensive online support for both consumers and enterprises, while AMD combines warranty services with in-depth failure analysis and partner support. For the firm infrastructure, Intel focuses on global manufacturing and smart capital investments, while Nvidia emphasizes flat organization approach, acquisitions, and data centers, and AMD has programmatic management approach. For human resource management, Intel has continuous innovation culture in their workforce, while Nvidia has grants in employee mentoring and learning, and AMD also has mentoring and inclusion focus. For their technology, Intel has strong manufacturing developments like wafer fabrication, while Nvidia has a strong AI software stack, and AMD has IP-heavy design with encryption. Lastly is procurement, where Intel maintains a large RMI-compliant and extensive supplier network and promotes responsible sourcing through initiatives like the Catalyze program. Nvidia also adheres to ethical sourcing standards with AI-driven supplier management, while AMD emphasizes strategic procurement via its dedicated procurement center of excellence. Now let's see what strategies these companies are currently using to stay competitive. All three firms use broad differentiation. Intel covers a broader range but lags in GPU and AI performance, whereas Nvidia holds a strong advantage, while AMD innovates in CPUs and GPUs but lags in AI. For the scope of competition, Nvidia dominates AI and GPU but with a narrower focus. Intel and AMD serve broader computing markets, especially in CPU, with Intel leveraging its Foundry 4 reach. For the overall business strategy, Intel emphasizes scale, openness, and people. Nvidia focuses on platform leadership and IP in AI and computing, while AMD prioritizes customer-driven innovation and partnerships. For the recent strategic moves, Intel prioritizes engineering and customer focus. Nvidia expands AI offerings in sectors like health and finance, and AMD boosts its product portfolio competitiveness. Now let's look into the functional areas, starting with R&D, technology, and product design. Intel is rebuilding through innovation, aiming to lead in AI chips and foundry, but lags behind Nvidia in performance. AMD refines design and partnerships but lacks ecosystem dominance. For the supply chain, Intel builds a diverse, resilient supply chain. Nvidia partners with TSMC and uses AI for efficiency. AMD also works with TSMC and emphasizes sustainability through struggles with balancing efficiency and resilience. Next is the production. Intel uses its own foundries, gaining control but incurring higher costs. Nvidia and AMD are fabless, focusing on design but relying on third-party foundries like TSMC. For the marketing, Intel focuses on AI to strengthen its brand identity. Nvidia expands through partnerships in digital marketing, while AMD leverages channel partnerships for global reach. For the IT, Intel actively protects its large patent base. Nvidia holds high-value patents but faces AI-related IP issues. While AMD prioritizes sustainable design and security, a broader patent protection is still needed. For the HR strategies, Intel promotes diversity and inclusion but faces backlash over layoffs. Nvidia offers strong benefits but lacks D&I progress. AMD supports racial inclusion yet needs to improve gender balance despite solid compensation. Lastly, for finance, Intel focuses on capital efficiency with cost-cutting and acquisitions. Nvidia invests heavily while balancing stock buybacks, and AMD maintains cost efficiency but faces stock valuation scrutiny. Moving forward to the VRIO analysis, Nvidia's physical, financial, and organizational structure are considered valuable as they are important for the conduct of its business. But they are not rare because its competitors can easily obtain them, providing only a competitive parity. What makes Nvidia stand out is its technologies and GPU architectures, providing them a sustained competitive advantage as they were able to fully capitalize on these resources. Nvidia's human assets and intellectual capital and its brand image and reputation provide a sustained competitive advantage. Despite having a low number of workforce and less IP patents, the company focuses on quality and was able to capitalize on their reputation and branding as they were able to increase their sales from 2020 to 2024. However, its relationships and culture only provide a competitive parity. Nvidia's capability to support AI factories with end-to-end platform solutions and its Compute Unified Device Architecture or CUDA platform provide a sustained competitive advantage as these allow them to provide continuous innovation and superior quality products to its customers, which help them outperform its competitors. In the case of AMD, most of its tangible resources are valuable but they are not rare. Hence, these resources only provide a competitive parity. In terms of its technological assets, they only provide a temporary advantage because they have not fully capitalized the potential of these assets. Although AMD's intangible resources are valuable to the company, they are not rare. Thus, they only provide competitive parity. While AMD's GPU architecture and compute design capabilities can be a source of competitive advantage, AMD is still on its way to redeem its competitiveness in the GPU market as it faces competition like Nvidia and other semiconductor companies. Comparing the three companies, the only company that has a source of sustained competitive advantage is Nvidia. Its technological, human assets, and intellectual capital, its brand image and reputation, along with its capability to support AI factories with end-to-end platform solutions, and its Compute Unified Device Architecture platform provide a sustained competitive advantage. These explain why Nvidia has outperformed its rivals and has positioned itself as the market leader in the GPU market for many years now. Let us get a full view of how Intel compare against its competitors Nvidia and AMD in the industry. Financially, Nvidia stands out with its strong profitability, operational efficiency, and cash flow, indicating its leadership in the market. Intel struggles with a volatile performance and declining ratios despite its reasonable financial leverage. AMD is betting big on R&D, but their ratios are currently declining. In terms of operational strengths and weaknesses, Intel's in-house manufacturing allows them to have supply chain security, but currently at higher costs. Capital expenditures on their fabrication facilities may weigh on their financials. It is worth noting that they have also been slow to adapt to AI trends. Nvidia, on the other hand, avoids the capital intensity from fab facilities. They focus on high-impact patents, mostly on AI, although this invites legal risks as the field grows. AMD competes on price, flexibility, and customer focus, but there is exposure to supply chain and product line issues that might hinder them from scaling production at low prices. Production advantages can be seen in Intel, but Nvidia shows better execution overall. Looking at the long term, Intel's foundries could rebound from its losses. Nvidia's disciplined culture provides an edge for dominance, but they tend to over-rely on AI. AMD's growth is decelerating, but performance investments may reward them in the future. In summary, Nvidia leads among the three, but Intel's scale and AMD's affordability keeps the competition. The challenge remains on whether Intel's strategies can bring them back to bearing the title of a leader they once had. Now let's look into the industry-wide perspective with Porter's 5 forces. The GPU industry shows strong growth and profitability, but the threat of new entrants remains low due to high capital requirements, advanced technology demands, and the economies of scale enjoyed by incumbents. Incumbents also actively defend their positions through patents, proprietary technology, and strong brand equity, leading only well-established players with vast resources such as Amazon, Google, or Meta as potential entrants, but such entry remains costly, complex, and highly risky. The threat of substitutes in the GPU market is low. While FPGAs and CPUs are readily available, and TPUs are only accessible in the Google Cloud Platform, these substitutes provide less value with its lower performance and features compared to GPUs. There is also high switching costs for substitutes because customers such as OEMs need to redesign their product to ensure that these GPU substitutes are compatible with the software. Bargaining power of buyers is low in the GPU market. Buyers face high switching costs due to infrastructure lock-in and limited substitutes, with only Nvidia and AMD dominating the space. While tech giants like Google and Meta are making their own chips, most buyers still depend on a few suppliers for high-performance GPUs. Moderate to strong bargaining power of suppliers exist in the GPU industry. The main strengthening factors is the high switching costs and the differentiated products suppliers provide, most especially the manufacturing suppliers. However, supplier power is weakened by buyer concentration and the capability of buyers to backward integrate. Industry rivalry is strong in the GPU market. The primary contributing factors include the high number of rivals, including tech firms like Google and Meta. While diversity of competition may weaken the rivalry, factors such as competitors' aspirational motivations, expected demand growth in the industry, and the homogeneity of the products further strengthens this rivalry. Overall, the GPU market is a moderately attractive industry due to high barriers to entry, low availability of substitutes, and weak buyer power. However, the considerable supplier power and strong industry rivalry makes the GPU market quite unattractive. Continuing the macro environment exploration of the industry, let's now shift to the PESTLE analysis. In political analysis, US additional tariffs continues to disrupt GPU supply chains, and China retaliating may hit GPU sales in the country. Also, continuing geopolitical tensions disrupt supply of raw materials and GPU sales. For the economic side, global growth is projected a slow pace of 3.3% through 2026. The GPU market is set to soar to $1.4 trillion by 2034. As inflation declines, central banks are cutting rates as response. Social-cultural factors such as the favorable attitudes towards AI is good for the industry. However, longer tech replacement cycles among tech buyers and the lack of skilled workers may be an issue for the firms in the industry. Analyzing the technological aspects, there is an increase in spending on R&D in chip companies, and the increased government investment on semiconductors can be favorable for the firms as AI is on the rise. Meanwhile, cybersecurity threats like hacking and ransomware can negatively affect companies. In the legal factor, the CHIPS Act continues to be in place, which is favorable as it helps support companies in the industry. However, rescinding of the executive order for safe, secure, and trustworthy artificial intelligence in January 2025 may be unfavorable as it reduces regulatory compliance, leading to legal issues in the industry. In the environmental factor, there is a non-focus of ESG in the US. This factor is unfavorable for the industry because the lack of ESG focus contributes to harmful environmental practices, which can also discourage investors. And Gen AI and chips development still pose large consumption of resources, which can be unfavorable for the industry in terms of sustainability of resources. Utilizing price and performance variables from Walton 2025's discrete GPU data, the strategic map reveals Nvidia plays in the high-performance premium pricing position. AMD is occupying the mid to high performance with more affordable prices, while Intel is at the lower left with low to mid performance and budget-friendly prices. The map also reveals that the major industry players are differentiated clearly with no overlap of positions. Wrapping up the industry analysis, the GPU market demands a strategic focus on several key success factors critical for sustained growth. With that, we identified 4 KSFs, which are technological leadership and innovation, comprehensive software ecosystem and developer management, targeted market segmentation and diversified portfolio, and having advanced manufacturing capabilities and resilient supply chain. We rated these KSFs according to their importance and urgency and found that among these 4, the first KSF is considered to be the top priority that firms in the GPU market should look into, while the third KSF has lower prioritization. Even with a difference of prioritization, all are equally critical for firms to consider in the GPU market. We now have a clear picture on Intel's position through a different lens. This leads us to the question, can Intel lead the GPU market? In our next report, we will move from insight to action. This has been the Fairies Consulting Group, and we solve what truly matters.